Hello. Welcome to our next chapter, that is your SEZ units taxation. SEZ means special economic zone. So any unit which is being set in your SEZ will have a separate taxation. So government has given certain benefits to SEZ. So the section is 10 double A, that is any newly established unit in a SEZ. So undertaking which manufactures, what you have to remember, it should manufacture any articles or any computer software in a SEZ. These undertakings will be allowed a deduction. SEZ approval should have been received before 31st March 2020 and they should begin manufacturing up to 31st March 2021. That means they should have already received the approval as on 31st March 20. That means it should have been incorporated, the approval should have been received before 31st March 20, and their operations, what you have to remember is, and their operations have started by 31st March 2021. The below income will also be eligible for 10 double A. So apart from these, any software developed at a client's place, and next is profit earned as a result of deployment of technical manpower, that is if any person you have deployed at client's place abroad for software development. Okay, now for the first 5 assessment years, 100% of your export profit will be exempt, that is it will not become taxable. So the first 5 assessment years it is 100%. For the next 5 assessment years it is 50%, and for the next 5 years, so this is cumulative 5, 10, and 15 years. So for the next 5 assessment years, the exempt amount will be lower of amount transferred to SEZ reinvestment allowance reserve, or 50% of export profit, whichever is lower. So amount allowed as deduction will be the amount that you have transferred to the SEZ reinvestment allowance reserve, or 50% of export profit, whichever is lower. Okay, we've been studying export profit, export profit, export profit. Now, what is export profit? Now, your export profit is basically your PGBP of the SEZ unit, that is the profit and gains from business and profession of the SEZ unit. This you will multiply with the ratio of export turnover upon total turnover, because the government wants, the income tax department wants that only your export turnover, only the proportion of your profit from export should be exempt. So your exempt turnover upon your total turnover, this gives you the ratio of that what portion of your turnover is export. Now this portion will only be exempt, that is this into your PGBP. Now what you have to remember is, there has been, I put an asterisk over here, or asterisk means you have to exclude any freight and insurance from turnover. Okay, so in both of these calculations you will not include any freight and insurance. This is the next is any reserve amount to be utilized to buy new plant and machinery within 3 years. Which reserve are we talking about? We are talking about the SEZ reinvestment allowance reserve. So once you have put your money in this reserve, you will be able to use it. So reserve amount to be utilized, use where you will have to buy new plant and machinery within 3 years. Got it? And with this, our SEZ taxation has also been completed, and I'll see you in the next video, that is partnership firm and LLP taxation.